Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today we're digging into a pretty packed set of sources. We're looking at macroeconomics, crypto, global tech. It's all connected.
It really is. The big news, of course, is the U.S. Federal Reserve's announcement back on September 18th. So our job today is to, figure out why Powell and the Fed did what they did with rates.
Right. And then see how the markets, especially crypto, took the news.
Exactly. And we also need to look beyond the U.S., what's happening with partnerships, regulations in the U.K., and some really interesting tech moves in the Middle East, particularly the UAE. It all ties together for digital assets and AI.
Okay, so our mission basically is to connect those dots for you.
Yeah.
Give you the shortcut to understanding the bigger picture. All right, let's unpack this. So let's start right at the core. The FOMC, the Federal Open Market Committee, they cut interest rates by 25 basis points.
Yeah, a quarter point. Now, this wasn't exactly a huge shock. The market kind of expected it.
But reading between the lines, there was some debate, right? The sources mentioned Stephen Miran, President Trump's nominee, was pushing for a bigger cut, 50 basis points.
He was, yeah. But the committee decided on the 25. And Chair Powell's explanation is key because it shows what they're really prioritizing right now. They have that dual mandate.
Yeah.
Keep employment high and inflation at 2%.
So how did they frame the economy to justify the cut?
Well, Powell described the first half of 2025 as seeing, let's say, moderate growth. Things slowed down a bit. Job gains were slower, too.
And unemployment. Still low, but
it did tick up slightly. Just a little sign of potential weakness, maybe. But the real kicker is inflation. It actually picked up a tiny bit, now sitting at 2.9%.
Okay, hang on. Inflation at nearly 3%, and they cut rates. Doesn't a rate cut usually boost things and risk more inflation?
That's precisely the point to grasp here. By cutting rates, even just 25 points, while inflation is still sticky, well above their target, They're signaling something.
What are they signaling?
They seem to be prioritizing the employment side of the mandate over aggressively tackling inflation right now. They appear more worried about job stability slowing down than about inflation staying near 3% for a bit longer.
So they're okay with inflation staying higher for longer.
It seems that way. They reiterated their commitment to the long-term 2% target, but they're now projecting they won't actually hit that until 2028. So essentially, they're trading a slower return to 2% inflation for, hopefully, more economic stability in the near term.
Got it. So less of an emergency boost, more like tapping the brakes gently on potential economic slowing, focusing on jobs.
Exactly. And they did confirm they'll keep reducing their balance sheet holdings, treasuries, and agency stuff, but Powell made a point of saying those holdings are pretty much negligible now anyway.
Meaning the interest rate is really their main tool again.
For sure. That's the primary lever now.
Before we jump to markets, Powell made this interesting comment about tariffs. He said something about who actually pays the price increases.
Oh, right. Yeah, he mentioned that in some industries, the higher costs from tariffs often get absorbed by the third party, the middleman, the distributor, not always the final customer.
Which kind of goes against the usual assumption that tariffs just mean higher prices for consumers immediately.
It does. It suggests a more complex picture where maybe distributors eat some of the cost to keep their market share. Adds another layer to thinking about where inflation pressure comes from.
Definitely complicates things. Okay, but let's pivot. We have this macro signal. Caution, focus on jobs. The big question for many listeners is, what does this rate cut mean for riskier assets? Bitcoin, altcoins.
Well, generally speaking, lower interest rates are seen as a green light for risk-on behavior.
Why is that?
Because when safe stuff, like U.S. Treasuries, pays less interest, investors naturally start looking for better returns elsewhere, even if it means taking on more risk. Plus, cheaper borrowing costs can free up more capital to flow into assets like crypto that are seen as having higher growth potential.
And there's the U.S. dollar effect too, right?
Globally. Rate cuts tend to put downward pressure on the dollar, and when the dollar weakens, assets like Bitcoin, which some see as a kind of digital gold or a hedge against fiat currency losing value, can look more attractive to international investors.
So what did the crypto market actually do right after the announcement? What did the numbers show?
It was interesting. The overall global crypto market cap stayed pretty stable, around $4.14 trillion. Barely moved, up maybe 0.01%.
Okay, so no massive immediate jump there?
No, but look at the 24-hour trading volume. It surged, jumped way up to $173 billion. That's a big number. And stablecoin volume also saw a significant rise.
It could mean.
It often suggests that big players moved money into stablecoins, getting ready to buy other cryptos. It's like dry powder waiting on the sidelines.
So a sign of potential buying pressure building up.
Right.
What about the ETFs?
Yeah.
The institutional money flows.
Okay, here the picture gets a bit more nuanced. Total net inflow into crypto ETFs was positive, $230.3 million. Good sign.
But the sources highlighted a split within that number.
A big split, yeah. Almost all of that inflow, nearly $292 million, went into Bitcoin ETFs.
While Ethereum
ETFs actually saw outflows, negative $61.7 million.
Wow, that's quite a difference. What do you make of that? Does it mean institutions are just treating Bitcoin as that macro hedge for now, the digital gold play boosted by lower rates, and maybe they're less certain about Ethereum in the immediate term?
That's probably a fair reading of this immediate data. Bitcoin is often the first stop for macro investors looking for that non-sovereign asset exposure. Ethereum's value is maybe more tied to things like DeFi innovation, NFTs, and regulatory questions around staking, which might make it seem a bit more complex or less urgent for some big players right now.
So a bit of a cautious wait-and-see approach on Ethereum from institutions, perhaps, while piling into Bitcoin as the primary macro bet.
Seems plausible based on those flows. And what's really fascinating is how this timing lines up with Bitcoin's own historical cycles.
Ah, right. Here's where it gets really interesting, the halving cycle timing.
Exactly. Historically, about 18 months after a Bitcoin halving event, which puts us right around October next month, that's often when we've seen the price really take off, sometimes going parabolic.
So you've got this slightly supportive Fed policy landing just as we hit a potentially critical point in Bitcoin's historical cycle.
Precisely. That combination could be boosting underlying confidence, even though Bitcoin's price dipped slightly, like 0.80%, in the 24 hours right after the announcement to around $115,900.
It was still up over the week.
Right. Up 1.84% over 7 days. Shows resilience.
And this isn't just market sentiment floating on air. we're seeing solid, long-term institutional commitments being made, which leads us nicely into some key partnerships.
Yes, absolutely crucial context. The big one is the renewal of the Bitcoin for Corporations partnership, the BFC group. It's Bitcoin and MicroStrategy extending their collaboration.
How long for?
Another 5 years, all the way through 2030. And this matters a lot.
Why is this specific partnership such a big deal?
Because this BFC group, it includes 38 member companies now, and together they hold something like 69% of all Bitcoin held on corporate balance sheets globally. 69%.
Right, it's a huge chunk.
It is, and it shows this isn't just a short-term trade for them. It's a long-term treasury strategy. Their renewed focus on education, networking, helping companies actually integrate Bitcoin into their treasury operations. They're building the institutional rails for Bitcoin as a reserve asset.
So that's the serious corporate treasury side.
Yeah.
But we're also seeing adoption aimed more at, everyday users through entertainment and loyalty programs.
Yeah, the UFC and Fight partnership is a great example there. They're using blockchain for fan engagement.
How so?
Their Fight Out ID is becoming this loyalty platform. Think blockchain-powered experiences, maybe bonus pools for predicting fights, exclusive digital gear, that kind of thing. It's about taking Web3 beyond just finance and into digital ownership and rewards for fans.
And the funding for this came partly from UFC fighters themselves.
Yes, several fighters and other athletes invested, which shows buy-in from people right at the heart of that community. They clearly believe in this digital model.
Okay, so adoption is pushing forward. But with more institutional money and mainstream users coming in, the regulatory side becomes critical. Let's talk about the UK.
Right. The UK's Financial Conduct Authority, the FCA, they've just put out a really important consultation paper. They're figuring out how to apply financial rules to crypto firms.
And it sounds like they're trying not to just jam old rules onto new tech, but actually tailor them.
That seems to be the approach, yeah. A key proposal is asking whether the consumer duty rule should apply to crypto.
Remind us what the consumer duty rule is.
It's a big deal in traditional finance. It basically forces firms to act in the best interests of their customers and deliver good outcomes. They have to prove their products and services are genuinely beneficial. Applying that to crypto exchanges and platforms would be a major step up for user protection.
A much higher standard. And what about when things go wrong? Disputes.
This could be huge. The FCA is asking if crypto users should get access to the Financial Ombudsman Service, or FOS.
The FOS. That's the independent body that settles complaints against banks and investment firms, right? Free for consumers.
Exactly. If crypto users could take complaints there, it would provide a really strong, impartial resolution path outside of the courts. It would put crypto on a much more level playing field with traditional finance in terms of consumer safety nets.
That's significant. When might these rules come into effect?
Well, the consultation is running through October and November this year. Then they'll digest the feedback. Final rules are expected sometime in 2026. It shows a deliberate, step-by-step process in the UK to bring crypto into a regulated framework.
Okay, a methodical approach in the UK. Now let's shift gears again across the globe to the Middle East, specifically Dubai in the UAE. Seems like a real innovation hub emerging there, especially in AI.
Definitely. Two big announcements signal that. First, at an ASUS Tech Summit in Dubai, they unveiled services for what they're branding SIN Artificial Intelligence.
SIN AI.
Yeah, SIN. Seems to be their internal term, but the focus is clearly on high-security AI, national control over data, what many call sovereign AI. They're framing it as strategically vital for the nation.
And what's their angle? What makes their approach stand out?
It looks like a really strong focus on the underlying hardware. They're talking about future-proof AI infrastructure, things like massive scalable storage, advanced cooling systems, sustainable power. They're even designing custom GPU setups for specific projects.
Custom GPUs.
Yeah, and stress testing them intensely, like for 168 hours straight. The goal seems to be building incredibly robust, tailored AI systems very quickly, especially for critical sectors like healthcare.
So building the heavy-duty foundation for serious AI work. And it's not just theoretical. They're already applying AI in complex finance like M&A.
Right. That brings us to the second announcement, a company called Serata. They're using AI specifically for mergers and acquisitions, deal tech, and expanding fast across the Middle East.
And Dubai is a growing hub for M&A anyway, isn't it?
Huge hub. The UAE saw 24 M&A deals worth about $1.9 billion just in the second quarter of 2025. So Serata is tapping into a booming market.
What's their AI actually do for these deals?
It's pretty advanced. They claim their AI offers predictive insights on deal risks and opportunities with 97% accuracy. Plus, it includes things like 247 behavioral monitoring of the deal makers involved.
Behavioral monitoring to ensure compliance.
Yeah, helps track conduct during sensitive negotiations. And crucially, for compliance with local laws, they offer local data storage within the region. That ticks the data sovereignty box and helps streamline these big, complex deals happening in the UAE.
Okay, so wrapping this all up, we've got the Fed sending a signal of caution, prioritizing jobs, which is maybe mildly positive for risk assets like crypto.
Right, especially with that Bitcoin halving cycle timing coming up next month.
Then we see serious corporate commitments solidifying, like that BFC group renewal representing, what was it, 69% of corporate Bitcoin?
69%, yeah. A
Bitcoin.
massive concentration showing long-term strategy.
And meanwhile, places like the UK are building tailored crypto regulations, while hubs like Dubai are really pushing the envelope on advanced AI infrastructure and application.
So what does this all mean? Well, you see the macro environment providing maybe a gentle tailwind for risk assets. You see corporate adoption getting more deeply entrenched. And you see specific regions carving out niches, the UK focusing on careful regulation, Dubai going hard on cutting-edge AI and finance tech.
It really sets up an interesting final thought for you, the listener, to chew on. We see the UK's FCA actively trying to create new rules specifically for crypto, things like the consumer duty, access to the ombudsman, instead of just forcing old banking laws onto this new industry.
So the question becomes, is that approach making rules that are fit for purpose for digital assets going to create a fundamentally better, safer, and maybe even more innovative environment for this industry to grow in the long run? Is tailoring the rules smarter than just retrofitting old ones?
Something for you to mull over. That's our deep dive for today. Thanks for joining us.
We'll catch you next time.